Picture this. You agree to a settlement with the CRA, expecting closure, but years later you discover the way your tax losses were applied changes everything about your refunds. Back in 1995, Scott Laprairie invested in a limited partnership and reported a very large loss. Years later, the CRA audited thousands of investors in the same partnership. To close the matter, CRA offered a group settlement. Scott accepted and signed a waiver. The waiver is important. It was CRA's way of saying, we'll allow part of your denied losses, but in return you give up the right to object or appeal about these partnership deductions again. In other words, the waiver locked in the deal. CRA would allow the numbers and the taxpayer promised not to fight them again on that issue. But here's the catch. After the waiver was signed, CRA reassessed Scott and applied his $304,000 loss back to 1992 and 1993. That used it all up. Scott said he would have chosen to carry those losses forward to 1997 and 1998, the years still under appeal. The key question was, did CRA follow the waiver correctly or did they overstep? The court explained the Income Tax Act gives taxpayers the right to choose when and how to apply non-capital losses within the allowed time frames. Losses can be carried back 3 years or forward 7 years at that time. The waiver never took away that choice. It only confirmed that the losses existed and could be carried over to other years. Whereas CRA treated the waiver as if it gave them control over which years the loss should be applied to. But the court said that was not the deal. The waiver was meant to settle the size of the loss, not the timing. Since CRA never asked Scott how he wanted to use the loss, they applied it incorrectly. The court allowed Scott to carry the $304,000 loss to 1997 and 1998 instead, subject to the small case limits of the Tax Code of Canada Act. The lesson here is clear. When you sign a settlement or a waiver with CRA, always make sure your directions about loss applications are written down. Otherwise, CRA may choose a route that does not match your plan and it can cost you valuable funds. At Cloudverse CPAs in Burnaby, we think of ourselves as your Google Maps for tax. Just like maps guide you through traffic, we guide you through settlements, waivers, and tax planning so you arrive at the best financial outcome. That's the Laprairie case for you, where one waiver, one reassessment, and one choice about timing of losses made all the difference. See you in the next video. Until then, bye.